Hello, my name is Roger Lemaitre, President and CEO of UEX Corporation. I see that since it's now start time of the webinar and there's about 33 people on who've registered and are signed up at the moment and growing, that we'll get started and let everyone else join us as they may. Please be advised that during this presentation we'll be doing a lot of forward-looking statements, so please be advised the forward-looking statement will be coming in the presentation and that we'll be relying on that forward-looking statement. Also, we will be posting this on our website here, the results of the webinar, so please look for that when you get the opportunity. For those people who didn't get a chance to come here, we will be answering questions. So the format we'd like to follow today is that I'm going to give a presentation here on both the cobalt and uranium industries and our cobalt and uranium assets. You have the opportunity at the top of your screen there to pick questions and answers. Submit some questions when you feel like it. They'll pop up for me to see during the presentation, but I'll be honest, I'll probably reserve answering the questions until the very end of the webinar. And with that in mind, we'll move forward. Like I said, here is the forward-looking statement. We will be relying on this. And also for those people who, while you're looking at the forward-looking statement, please realize that with those of you who are watching this on the webinar, that the statements made here are valid in June 2019, and they will no longer be valid beyond that. So if you're relying on this beyond June 2013, please take that in mind. UEX is one of the oldest uranium junior companies in the world, established in 2001. We have 10 uranium deposits, almost 100 million pounds of resources. These 10 uranium deposits we own either 100% of, or we partner with Orano on a couple of them as well. We have over 287,000 hectares of land, one of the largest land owners in the Athabasca Basin, the world's most prolific uranium producing district. A couple of years ago, we formed our wholly owned subsidiary COEX Metals, and the idea was COEX was to be responsible for our emerging cobalt assets in the Athabasca Basin, of which we have one of only two primary cobalt resources in the Athabasca, or in Canada, at a very small discovery cost. And our key advantage, our competitive advantage is two. One is our location, the other one's our experience. All of our assets are located in Saskatchewan's Athabasca Basin. In 2018, the Fraser Institute ranked the Saskatchewan as the #3 global mining investment jurisdiction. But we're also considered to be #1 in terms of, probably more importantly to moving projects forward, on the global policy index. We have very mining-friendly stakeholders. There's this historical, Athabasca is a historical uranium mining district, and the local communities are intimately involved in development by providing services, employees, and materials to the operations. Our infrastructure blessed with roads, power, highway, all in the neighborhood. And historically, this has been one of the lowest cost world-class uranium mining districts in the world. From a company perspective, we have over 112 years with our very small team executing Athabasca exploration programs, and our team members have been involved in over 8 new deposit discoveries around the world. But probably more important to you is we have a unique and unparalleled understanding of Athabasca cobalt nickel deposits that nobody else has. So here's the Athabasca Basin, our portfolio. You can see we have properties along all 4 corners of the Athabasca Basin. We have large land position in the infrastructure blessed areas. We're around the existing mines in the east, and where we own 100% of all these lands. We have just near the Key Lake deposits, and then this whole portfolio of properties over here, where the most majority of them are partnered with our friends at Areva. And we'll be focusing in here after we talk a little bit about cobalt on the West Bear area. You can see from this map, this is a map of the 2017-2018 world cobalt production globally. And you can see that the DRC in Central Africa comprises almost 60% of the world's cobalt supplies. Only about 98% of the world's cobalt comes from a byproduct from either copper or nickel production, with the exception of this Morocco here, has the only world's primary cobalt deposit. So one of the biggest challenges we have, and we see that the DRC is around 60% today. In about 4 or 5 years, it's going to ramp up as cobalt demand ramps up to about 75%. There's a lot of challenges in dealing with the source of supply that's so dominant in the world stage that has serious ethical and supply security concerns that they have in the DRC. We think that's going to drive demand for other cobalts around the world. What's driving excitement about cobalt is these two slides here. You can see the forecast of EV sales. Cobalt is an integral part of EV batteries that drive these electrical vehicles. And you can see here that between 2015 and 2040, you're going to see a rapid increase in the amount of total cars produced that are powered by electricity from batteries. In 2018, we hit 2% of called 2% penetration, or 2% of the cars built today are EVs, and this is being dominantly sold in China. You can see on the right-hand side, Europe, the USA, Japan, and the rest of the world are catching up. China is definitely the leaders in electrical vehicle sales and in production as well. But you see that, quite frankly, there's a rapid growth anticipated in electrical vehicles, and even the most optimistic forecasters a couple of years ago's forecasts are being easily met, because we're already at 2% here with a year to go to hit 3%. The other thing about cobalt demand, you can see here, is that there's been a lot of weird news when we started getting into cobalt a year ago about what was happening in the cobalt world. You can see here on the right-hand side a lot of talk about engineering cobalt out of batteries. I think what's happened over the last year is that this sort of myth and fallacies and thoughts and misinformation with that has been proven to be a little bit wrong, and that actually it's not possible. So there's two key things going forward. You can see today's electrical vehicle batteries, the NMC1 and NMC2, the 622 batteries, where they're 1 part nickel, 1 part cobalt, 1 part manganese, versus the NMC, which is 6 parts nickel, cobalt, and 2 parts manganese, that they dominate electrical vehicles today. And so people have been trying to engineer cobalt out. It's not working very well. They need the thermal characteristics and energy densities without the right thermal characteristics that cobalt bring to the batteries. You can have situations like the Samsung Note 7 battery explosions and fires, because they're not thermally stable. Cobalt brings that to the table. And you can see that, should the NMCA and NMC 881 batteries become dominant in the space, that there's going to be up to 1/3 reduction in a per unit basis for each individual car battery. Might have 1/3 less cobalt in it than it does today. But those are developments that have yet to happen. You can see on the left-hand side, though, that EV passenger demand for cobalt is substantially higher, and alone by 2030, in 11 years, the demand for that will exceed the need. That's considering the adoption of NMC and 811 batteries. But right now, I think what we've learned, probably more so than anything else in the last couple of years, or in the last year or so, is that the adoption of 811 batteries is not coming quick as we want. And also an understanding of how we're bringing two different industries together, the mining industry and the auto industry. And the auto industry has procurement works a little bit differently than what we're used to seeing in the mining industry. So automakers today are designing cars for 5 years in the future. And so they are unlikely to take a chance with their brand and offer a new battery maker who's developing a new battery like the 811 the opportunity to put it into their cars today, because the technology's not been developed or perfected, and that's just too risky for them. So they're going to stick with the existing battery formulas you see today, because they don't want to have a brand problem 5 years from now. Meanwhile, there's about $32 billion being invested into these new battery factories to supply these EVs. And I think it's very unlikely that 5, 6, 7 years down the road, as these factories start up and running, that they're going to instantly retool. So we think that the existing battery technology is going to last longer than this and actually have a bigger driver on cobalt demand than what's been forecasted out there today. What we're seeing in the cobalt space over the last year is M&A activities are on the rise. You're seeing companies starting to combine with each other. You're seeing opportunities of swapping of assets, like at Freeport and Glencore and Umicore swapping assets. We're seeing supply deals beginning to happen where people are looking to get materials sourced from safe jurisdictions that don't have the same challenges with child slave labor and corruption as you see in the DRC. But meanwhile, there's been some price uncertainty due to short-term supply issues. We've seen a supplier come into the market and have an issue in their growth of their new mine, and have their export permits for their cobalt stopped because of contamination issue. That group's been trying to tell the world that they're going to put all this stuff out in the market in 2020, and we're finding as things go along, getting closer to those dates, that it's really uncertain that's going to happen. So there's an alleged oversupply, but it may not happen. what we're seeing automakers do is widen out their supply chains and actually start to work their way down the supply chain into battery making, and even into source of supply for things like cobalt. And probably more than anything else, we're taking an industry here that was very global and a global industry, and we're actually starting to regionalize it. You're seeing the Europeans, for example, build up the European Center for Battery Technology. Like Volkswagen start to build plants to help them move forward, and you're seeing basically we're starting to enter into a sort of regional EV arms race, which didn't really exist a year ago, and that's we're going to see continued regionalization and strategic centers open up for these batteries. So switching gears to our assets at West Bear. West Bear is one of the older projects in the Athabasca Basin. We've had it since the inception of our company, and the property itself goes back to the 1970s through various operators. And it was the scene of a small uranium deposit discovered back in the 1970s. Our work at UEX post that has been able to find nickel and cobalt nearby. What I like about our West Bear cobalt nickel deposit is cobalt-driven cobalt. So this little pie chart here, the teal blue colors, shows you the in situ value of the cobalt compared to the in situ value of all the other metals combined. And you can see that cobalt is dominant value for the missing material here at West Bear if it were to move forward into a mining operation. And why is that important? Because 98% of all cobalt in the world is a byproduct of nickel or copper production. It means that it's very insensitive to changes in the price of cobalt, because if you have a typical nickel sulfide deposit, it'll be 10 to 40 times as much nickel as there is cobalt. You're not going to increase cobalt production without significant thought, because you have to sell a whole lot more nickel or copper. So it's very insensitive to price changes. And you can see, compared to other projects either in production or in development today, that cobalt-driven cobalt, West Bear looks pretty good compared to a lot of the other groups out there, and that's great for investors who want to be involved in a project that supply output and is related to the dynamics around cobalt. The other thing about West Bear that's really interesting is some of the really high grades, which you can see here in yellow. Some of the highest grades in cobalt world drilled last year on our property here in 2018. So going into this winter's program, last year we invested a mere $1.6 million, drilled 41 holes on the sniff of cobalt that was found back in 2003 to 5, when we were looking to expand and find deposits along strike of the West Bear uranium deposit, which is located a couple hundred meters to the west. And we stumbled into this little bit of cobalt zone. We drilled a couple of holes, got some interesting cobalt dimensions to the deposit in 2005. In 2005, cobalt had peaked. The price of cobalt had peaked and come down on the backside based on perceived demand due to the rapid adoption of smartphones, and DRC ramped up production to accommodate that. It's a very small amount of the market. And in 2005, we were on 4 different uranium discoveries, including some Shea Creek, sniff at Black Lake. In fact, some work here on the West Bear and Hidden Bay properties as well, where we were getting interesting results. And the uranium price was moving on from its low of $7 to $10 in the early 2000s up to its run in 2007 of over $130 a pound. And so we put the interesting cobalt side of this on the back burner. And a couple of years ago, when cobalt was getting very interesting, we kind of half-heartedly said, oh, we should resurrect this cobalt play. It's pretty good, and kind of laughed about it. And then we saw what was coming out in the world for cobalt projects outside of the DRC. We were, wow, we should really resurrect this. And that's how we formed COEPS and started to move down this process. You can see that in 2008 or 18, excuse me, there was substantially a large amount of high-grade deposits. The pink outline here is the resource shell used in the resource report that was done in 2018. And you can see a whole bunch of these red dots. These dots are colored by grade. So the blue is above our cutoff grade of 0.023% cobalt equivalent, up to 0.25%. Yellow is 0.25% to 0.5%. Orange is about between 0.5 and 1% cobalt, and red is above 1% cobalt. And you can see there's a handful of holes, including this very high grade hole here, 4.9% cobalt, 2.808 nickel, excuse me, over 8 meters, that don't even fit inside the resource. And this is due to some of the subtleties related to short strike length the deposits that are open pittable under 43-101 rules and what you can and can't include in a resource from pit dynamics point of view, which hurts, but we've been able to resolve that. What you can see here is that we noticed at the end of 2018 the deposit was open in three different directions, particularly to the west. And so, why is that important? The next section here will look is a typical cross section through the middle of the good grade zones here at West Bear. And there's the cross section. You can see that mineralization, occurs at the unconformity and down into the basement along the structure. And it stops up at the unconformity. The higher grades seem to be about 35 meters below surface. So these lines here, they're spaced about 50 meters apart. So we're looking at mineralization in the sort of 30 to 85, 90 meter vertical depth range. And the best mineralization occurs below the unconformity, but not at the unconformity, generally speaking. And so you go, okay, that's great. Why is that important? So when we look 200 meters along strike, where we hit the historical West Bear uranium deposit, which is outlined here in red, you can see at a very different scale here some of the historical work that was done. And on blue is where cobalt and nickel mineralization goes. This salvager link can only drill till the rock gets a little bit more competent than plasticine, and so they basically stop until they can't drill any further. You can see that we were able to notice that cobalt and nickel mineralization extends through the uranium deposit, but actually below the uranium deposit, often to the end of the drill hole, as you can see here in some of these drill holes. So why is that important? So you take this cross section and put it on top of a typical cross section through the deposit right in this area here. You can see this is what's been drilled to the west. There's mineralization in cobalt, nickel, and it's never been followed up in the down dip direction. And the best mineralization, like we said, occurs sort of 30, 35 meters below surface to the 80, 100 meters below surface level. And has not yet been drill tested. So one of the things we did this year was look at drilling along strike to the west and under the uranium deposit, the down dip direction. And you can see here from our 2019 winter results, we were able to expand, what red here is the historical uranium deposit, blue here is the 2018 resource outline, and in the green-blue color here is the outline of the existing mineralization from the 2019 program. We were able to substantially increase the size of the deposit to the west to a strike length from almost 600 or just over 600 meters. Although same color creating here, the blue is the 0.023 and red is above 1%. Although it definitely was a little bit lower grade than what we saw in the 2018 program. But you can see some very good numbers from the core drilling in 2019. We've gone back and resampled the holes that were necessarily sampled completely along the trend here, and now we have a much better sense of the continuity of the deposit. And we'll be, since we just got the newest results here in this outline you're seeing of the new mineralized deposit, came out only this morning in our press release. We're still working on what this actually means in terms of the size and the quality of the deposit. So while we were excited about what we're doing at West Bear, what also excites us about is the regional potential. So this little red line is the conductor, which is basically the favorable location of the rocks that we're looking for in West Bear. And it forms a bit of a dome structure here. You can see it's about 12 kilometers long and 6-7 kilometers wide. And we've taken what we've learned from the West Bear deposit and started to have applied it to areas around the West Bear Dome that we think are prospective as well, that we could use to find other deposits in the neighborhood. And you can see we have identified several of them, particularly on the northwest side here. In particular of interest to us is this area here where we have a 500 meter long area where there's anomalous nickel, has a structural rock type and structural scenario that's identical to what we're seeing at West Bear, only 2 kilometers to the north of West Bear. And we're getting anomalous uranium across around a wide strike place of the unconformity. However, they only drilled this area for uranium, and they only drilled to the unconformity and stopped. And in fact, they actually were trying to follow up some of the mineralization. The holes died in the strong alteration, and they never came back. And then all this work was done in the 1970s, so they're not using today's thoughts and models, and they certainly weren't aware of what we're doing with cobalt today. So we're really excited to we're out in here right now in the field. We found some of the lost core that was missing from the past. We're using that to help us refine our targeting for our next winter program. So what you can see here, there's 10 types of cobalt deposits that have either been in production or byproduct production for cobalt, or identified as having potential for cobalt. And we believe that the West Bear deposit doesn't actually be part of any of those types, and we were calling it a new type of deposit, the unconformity related cobalt nickel deposit. And you can see here, finding my first boss in the industry always told me that finding a new deposit is like 5 blind men trying to describe an elephant. And you can see from the picture here that, yeah, you know, depending where you stand, the deposit looks very different. Some people stake it's a tree, and they're all right, but they only have a piece of the picture. And we would argue at UEX that for this whole history of exploration in the Athabasca Basin, the fellow looking here on the left-hand side that says it's a spear was the one touching the tusk, and it's hard and bony. And because of their focus for looking only for uranium deposits, they were convinced that they touched the little bony spot, they were only ever finding a rhinoceros. So when it didn't pan out, they would move on and think, what we're trying to do differently at UEX is say, okay, we may have a piece of the animal, what are the other possibilities that are around? And using that to help us guide our exploration. So switching gears from cobalt, we'll go into some of the uranium market fundamentals here, dynamics. Drivers for nuclear energy growth are global energy growth. We're seeing substantial increases in demand as the world electrifies. And the electricity is directly tied to people's economic well-being and life expectancy because of what benefits electricity do for society. But that's dominantly being baseload energy. Politically, we're seeing the need for clean air and climate energy, and nuclear is one of the few places where you can, few styles of or formats that you can use to generate electricity with clean energy that's baseload and secure, not subject to changes in the wind or sun. These are dominantly happening in areas where economic development is occurring, and energy security is really important, without a doubt. You can see here right now there's 51 reactors under construction globally in a fleet of about 400 reactors. This dominantly by being built in Asia and China, as you can see from the graph here. In fact, Chinese construction numbers are the smallest they've been in the last few years because, quite frankly, they've been bringing on several reactors over the last couple of years. So they've gone from being in construction to being in operation, and you can see that's the bottom line here. They are rapidly underway in the next decade to become, probably the largest nuclear operating fleet in the world, surpassing the largest market right now, which is the United States. What interests me here is this is a graph here that shows you in yellow the spot price of uranium and various events that have occurred along the way, and in blue here is the quarterly sales of uranium at spot price. And you can see that things peaked, and in this peak, because of supply security concerns, there was a whole lot of uranium sold on term contracts. It's roughly of a 10-year window that started rolling over last year and will continue to roll over. And with the price being so low and things being in play, we could see that before the Section 232 petition was lodged, there were record volumes of material being bought on the spot market due to the little bit of oversupply that was in there before suppliers started curtailing production. And that instantly dropped off once the Section 232 investigation was underway. You can see that people were secure with supply till the world changed. So we'll get into why Section 232 is important coming up here. What we're watching for changing the uranium markets, because we know that today's prices that this is completely unsustainable when every single mining company supplier in the world is underwater because of the price. This is unsustainable. Mines are being depleted, they're not being replaced, and no investments going into space. At current prices, this is not sustainable. It has changed. There's not an industry in the world that can operate forever with every producer losing money. We're watching the pacing of nuclear power plant restarts in Japan. That's coming slower than we were hoping for, but we're still watching. The pace of reactor construction is up, and we're pretty excited now that China is sort of loosening the reins on new construction. Public sentiment towards nuclear is definitely changing. We're seeing the need for clean energy working forward. We all watch supply inventories and supply performance, and continued distance is going to be necessary to make things move in the right direction. So with that in mind, we're going to move right to our uranium deposits that we believe. Well, we know we have 10 uranium deposits. We know that they can't go at today's prices because nobody's can because the investment's not there. We're positioning ourselves to move these things forward when market demands. So let's talk about 4 of our 18 key projects. At Christie Lake, where it's located right here, right next door and along straight from the McArthur River mine, where the host structure host every pound of uranium McArthur River crosses over under our property, and the corridor hosts our known deposits where we had our maiden resource last year at Christie Lake. We know that resource isn't very big and big enough to support an operation yet, but we're still in the early days of exploring. In fact, quite frankly, when we picked up the property, we had a certain exploration model in mind looking for basement deposits. And really early on, we clued in to the fact that while there was some really good work done there in the past, the key target for finding a classic unconformity deposit was not tested. And we started looking at that, and actually led to our discovery at Aurora. And that potential hasn't been looked at. So we haven't even actually looked at the reason why we got the property in the first place. So zooming into the area, you can see the Paul Bay and Kenpen deposits that were here when we picked up the property from our Japanese partners in 2016, and the Aurora discovery that was made in 2016. And this little blue area is where we focused our entire work so far at Christie Lake. But there's these little red lines here are your proxy for your graphitic fault structure, and you can see that it's a geophysical remote image. And there's an offset between where it's imaged and where it actually occurs in our deposits are. You can see that along the entire length of that C conductor extensions, there's been untested. We know uranium deposits often form like pearls along a string, and there'll be multiples of them there. So we've got a couple pearls on a string, and then the rest of the string hasn't been tested yet, as you can see, with drill holes. So we'll be working on that over the coming year. And you can also see sniffs of mineralization parallel to the south here, and also actually to the north here, where we have mineralization that's in the basin below the unconformity. With this ideal place where we found either a Paul Bay or even and particularly Aurora style deposit has not yet been tested. So we'll be in here in August and September drilling holes to test some of these targets. Currently, over the winter program, we've been doing some geophysical resistivity surveys to help us refine where other than these obvious areas around the B conductor, but on the C conductor extensions, where we might want to focus some of our drill holes and help us refine targeting a little bit better, because things are pretty widely spaced. So we plan to spend just a little over $2 million at Christie this year. The geophysical survey is still ongoing because it works best under spring conditions, and so we're waiting to get the results before we start that program. You can see at Christie Lake, if we were to take that long section that we were talking about here and just cut a long section through along the C conductor, you can see that while there's a whole bunch of drilling in the area of the deposits, and there's at least 4 holes here that are either ahead of you, in front of the page, or behind the page, and with plunge of the deposits, there's a whole lot of area on that 2 kilometers that are yet to be tested with drill holes. We're pretty comfortable with that. There are a lot of deposits, trends, as you can see listed above here, that you see many deposits along the trend. Shifting gears towards Raven Horseshoe. Raven Horseshoe is located adjacent to our West Barrier and Hidden Bay projects in the eastern Athabasca Basin. The power line and the road literally go right over the deposits. And while it's lower grade than what you can see elsewhere, what I think is blessed with called direct access grades. Because of its lower grade and basement hosted potential, we can use conventional mining like you would use in places like the Abitibi Greenstone Belt to mine this stuff at a much lower cost than you would see in other deposits that aren't in the open pit in the Athabasca Basin, because we don't have the same issues with water because we're off the edge of the basin. So we believe with this deposit has a really good opportunity to move forward and make a modest amount of production, but we know that today it won't go forward. We did 2011 PEA, and we know that the break-even price is $45. We did a scoping study thinking maybe instead of doing tank leaching, we do at one of the mills, we would do heap leaching scenario. We got very, very impressive recoveries, and we think we'll continue to chase that forward when the market demands that this project be moved forward. But meanwhile, we'll continue to putter away with understanding our metallurgy. At Shea Creek, this is one of the first of the big discoveries in the Western Athabasca Basin, where you're seeing all some of our peers working. It's a very large deposit, which we own 49.9% of 4 deposits actually. We have 49.1% stake in over 95 million pounds of resources, and we're pretty excited because we think there's lots of potential to move this forward with more discoveries. So we're going to be working with our partner here. This is a wireframe of the 4 deposits, looking from north to south, from Colette through to Anne. And you can see that in red here is a model of the classic unconformity style deposit like you'd see at Cigar Lake. You can see in blue, green, and yellow are basement hosted deposit lenses that occur below those red zones. And you can see that there's not a lot of blue under some of these larger portions of red. And our belief is not because it's not there, it's because it's never been looked for. So we've been working our way from north to south through the raw data, the wireframes, and interpretations. We're starting to pick out areas along that fault structure, which tips like this, where we know the controlling features that form blue deposit, like over at Canada, are found. And we, such as one of these ones here in dark blue, we've already been identifying spots along here where we think there's a great opportunity to expand the resource substantially within the footprint of the existing deposits. And we're working with our partner Rano to identify and show them areas where we think there's great potential to grow this deposit. At Hidden Bay is in the eastern part of the basin where we're looking at emerging generally less than 150 meters of sandstone cover, and often less than 50, and zero in many spots. So we're right with highway infrastructure. We're surrounded by the mining operations of McLean Lake, Rabbit Lake, and Cigar Lake. So it's a really great location. But footwork in the past is focused almost exclusively on looking for classic gun-conformity deposits, the Cigar Lake style, McLean Lake style. And as a result, we know from the work we've done in the past, we have over 380 kilometers worth of confined graphitic faults, which is one of your key structural geological features you want to see in both basement and uranium and classic unconformity deposits. We have 1,800 holes hidden in this box, and this is the area where you're, historically, because you're looking for those types of deposits, you would never drill into the basin, basement rocks below the unconformity, so you drill that graphitic package right at the unconformity. And often you'd see sniffs of even cobalt or nickel or uranium and strong alteration, and they didn't pan into a classic unconformity deposit. But they would never test in the down dip direction, where the new deposits, like you're seeing at Arrow and Griffin and Eagle Point, are being found. So what we have at Hidden Bay is an area where generally have almost very thin to no sandstone cover, where we have a bunch of holes where these barren hotspots, these basement mineralized deposits, have an expression inside and at the unconformity in this box, and those expressions were ignored in the past. So we've identified almost probably 10 and a dozen of these opportunities across the Hidden Bay property with very little sandstone cover to look for the classic basement deposits in infrastructure plus the Eastern Athabasca Basin. And our team is currently out there now just trying to put the line refining into fully start so we can look at them starting next year. In fact, we'll be doing something this year as well. So on the horizon, we'll continue to discover new lenses at Christie Lake. We'll move forward with heap leaching at Horseshoe-Raven and testing and moving that project forward where the market demands. Finding more high targets or high priority targets at Hidden Bay, and then realizing cobalt value. So I know we're getting a lot of questions from shareholders over the last little while asking why we haven't done the spin out. And I'll be very honest with you, we certainly want to make sure that whatever we do with the cobalt, we see value contributing to our existing shareholders and not shareholders who come in after the fact. So we're working way back when we resurrected the cobalt assets in November of 2017. We were able to put some financing together, and in between January and middle of April of 2018, we defined a deposit, got a 43-101 report out, in the very early July of 2018, and two things happened in that period of time that worked against our ambitions. One was the correction in the cobalt price from $90,000 a ton cobalt to below $45,000 cobalt, and continuing to slide since then. And of course, that's really dampened investor enthusiasm. At the same time, there was a major financing in Toronto of over $300 million financing, and unfortunately, most of that financing got hung up in the hands of the brokers and who were helping the company finance, and it made cobalt a really bad word in Toronto and the financing community for a while. And that has improved, but not to the point where we think we can actually spin out or realize cobalt value by spinning through a spin out by just spinning it out. And the reason why is that at the end of the day, if the companies were to separate, they will both need financing. And so with COEX, we have a couple of choices of financing. One is we actually raise the money in UEX and give it to COEX and let them go on their way, which isn't necessarily fair to the people who are here for the uranium assets. Or we can do a public offering with a spin out. And so at the end of the day, what we're looking at is if we can do a spin out any time, it's the question of post financing through an IPO. Who owns the company? Is it existing shareholders or is it new shareholders that come in? And so for us to do a spin out where the new shareholders who come in are getting the vast majority of the ownership of the asset isn't fair to existing shareholders who put their time and money into developing the resource. So we're constantly monitoring and seeing where the market is. Of course, we could also finance with a small amount of money and find out that the company fails because it gets orphaned and can't finance itself. And we could do the same thing by financing through UEX, having them orphan because they can't raise money as well. So we're looking for the right time, and when that time is there, we will find a way. Meanwhile, we're looking at other ways to see value and exploring every opportunity out there. So I know it's hard for shareholders. They have to be it's difficult to be patient, but it is certainly the approach that we're taking. You can see we're trading at around 19 cents. The market capitalization just over $70 million, and we have significant money in the bank and for the next little while. So you've heard me talk for a long period of time. I'm going to turn it over to the questions here that are listed that you've submitted so far. Like I said before, I'll go through the questions. I'll answer what I can. There will be questions that I may not be able to answer because of disclosure requirements. So I'll do what I can, and I'll try to answer all your questions. So first question on the list here is from Max Trojan, and it says, let's say Westbury yields an initial 10 million pounds of cobalt and 5 million pounds of nickel in the ground, and after open pit expenses paid for from existing uranium deposit of 1.5 million pounds is further sold to an end user. What would the refining costs and subsequent profitability to UEX COEX? Alternatively, would UEX have the present day capacity to produce Westbury today by going it alone? So on the first part there, because we're still just putting the last bit of the interpretation of the deposit together, I don't know what the size of the deposit is yet, but also because until we have that, it's really impossible for us to get a sense of what the cost would be, and therefore, and of course, what the revenue would be. And so we're not in a position where we can make that call yet. When it comes to capacity to produce Westbury by going alone, I believe that we certainly would have that capacity. It's a very small market. It's even smaller than the cobalt market. And you don't produce a typical product that necessarily has to go through a traditional refining process because you're producing battery chemicals. And it's a small market. So we do believe it's possible, but it certainly would be a challenge. Next question from Murray Clark. What is next for Shea Creek? I believe this really could be the mother lode area, specifically due to the Carswell structure. This is a really big event in the Shea Creek, could be related to the Clough deposits. Yeah, I would agree. A lot of the deposits in the Athabasca Basin from one side to the other occurred within a certain period of time, and so they all could be somewhat related, including the ones at Carswell. Carswell certainly came after the deposits were formed, the impact structure. The interesting part for us is that actually Shea Creek's size is already bigger than all the uranium mined at Clough Lake. So yeah, we do believe, and as we mentioned in the presentation, we do believe there's substantial opportunity to significantly increase the resource there with additional work, particularly looking for basement deposits. Anonymous questions as to any latest theories as to why cobalt is present at Westbury in the first place. Does the ancient sea theory have any validity? If so, this means that cobalt and nickel can be found all over the property. Certainly our view that cobalt and nickel deposits can be found all over the Athabasca Basin. It's one of the things that we believe firmly in. That's why we're trying to drive the Athabasca to become an emerging cobalt and nickel district. We certainly know what we're looking for, and because it's a little bit of a competitive advantage in the short term, we're not going to get too into it as to what our latest theories are, because I do think it's something we want to protect for our shareholders. We do know that the cobalt and nickel, about half the cobalt or half the uranium deposits in the Athabasca Basin have high nickel and cobalt. And we know that nickel and cobalt are moving around in the same hydrothermal and structural systems, and they're probably occurring and depositing at the same time, or just after or during uranium deposit formation. What we found different at Westbury is we've seen a separation of the cobalt and nickel from the uranium, and that hasn't been looked for in the past because of the way that people have been exploring. So we do believe we're going to find more of these things. And so what we've done in our thought process is say, okay, well, how should we look for this? And so it's almost like turning the clock back 40 years ago in the Athabasca Basin when the start for the uranium hunt when the uranium hunt had begun. And where did they focus? They focused in the areas where there was infrastructure. They focused in the areas where there was shallow sandstone cover and pittable. And so that's exactly the way we're going to approach it, because we know that the basin hasn't been looked at for cobalt, and nickel. And so coincidentally, that also happens to be the spot where we have a dominant land package at Hidden Bay and West Bear, covering the shallowest portion of the basin with great infrastructure. And not only that, we have that huge database where they've been drilling to, but not below the ecoconformity that has all the smoke and fire and even cobalt and nickel sniffs that have yet to be followed up. So I'm really happy and favorable. I think we'll find more and more of this. Next question from Max Trojan. I understand U.S. investors are more focused on uranium assets in the future wake of Section 232, so this is very good. However, what is UEX doing to help raise awareness with deep discount relative to its peer groups, given the 100 million pounds of uranium ground? So we certainly are and have been busy. We just came back in early March, or May, excuse me, from New York with benchmark conferences, and we have done and reach out to U.S. investors. To be very honest with you, in the wake with Section 232, with all interest in the space, waiting to see that decision. It's very strange because there's no leaking as to which way it will go. We don't see any decisions or any interest moving until we see price move. And so we get a lot of people kicking tires and saying, we're really interested in this and we're interested in that. But until they see the price move, they're probably not going to jump in. But that soon's coming soon. Stephen, major question here: why have you not moved forward with exploring Christie Lake? Hopefully, we answered that during the discussion. But quite frankly, one of the key reasons why is that almost all the resources in the company, from a personnel point of view, went into exploring at Christie or at West Bear, because we knew we had to get work done because it's only winter accessible, and it took pretty much every hand on board to get that done. But the other reason why we didn't start at Christie Lake this winter is we wanted to do that resistivity geophysical survey to help us with, we have a handful of really obvious targets we want to drill to look for the next lens at Christie Lake. We wanted to bring that information to play beforehand. So that survey is ongoing as we speak. We'll have the results and we'll be back drilling the $2 million annual program here at Christie Lake starting around early August. Next question from an anonymous winner. With all the upside potential in the uranium market and cobalt COEX, and with UEX share price still undervalued, why are management members not buying more shares? That's a question I can't answer for everybody, so I'm gonna have to pass on that one. Gerald Sass. The side shows that all of the holes in the West Bear has one red dot in the lower right-hand side. It looks like high grade. It looks like it's by itself. Will that be incorporated into 43101? Or will there be more drilling in that area? Yeah, there's been some drilling around that high grade portion. I think we have a pretty good sense of what we need in the new reinterpretation. I don't think there's any more drilling needed in that area, because I think the team has a pretty good sense of what's happening there. And then as we do the interpretation of that may change, but at this point in time, we don't think so. Next question from Stephen Major. Where do you see the spot price, long-term price at year end? And that's a really difficult question because of the way the Section 232 is going to have an impact on the market. We do know that the biggest challenge with Section 232 is how it's impacted the buying and selling of uranium. As I mentioned before, we know that if tariffs come into place, I think you'll see all participant suppliers and utilities come back to the market. If a quota comes into place, it's going to create an interesting dynamic. We don't know where that's going to go. What we do know is that, one, we need to see the activity back in the space, and that either decision will have an impact on at least the spot price movement, because we know that the price can't stay like this and people continue to stay in business. So we think it's going to move upward, but how violently it moves upward, or if it moves at all violently upward, I really can't say. And because this has been a challenge for years, I'm not willing to go so, but we know it's not sustainable, current prices. Next question from an anonymous. Given that UEX has been fortunate enough to diversify into cobalt during the current uranium downturn, why do you believe the share price has been hit harder than all other uranium explorers, especially considering it's comparatively low historically versus its peers? So it's kind of one of these weird things. A year and a half ago, we got into cobalt. It was a great time to be in cobalt. We did fairly well compared to our peers because the cobalt angle was helping us as well. So in the second half of 2018, particularly, when uranium equities were starting to move in advance of the launching of the Section 232 petition, cobalt prices were cratering, and so we remained relatively flat because of our exposure to cobalt as well. So it's sort of a double-edged sword. Yes, it's been a bit of a challenge for sure. Next question. Mitch Vander Wright, I hope I said that and didn't butcher your name improperly. Is there potential to expand the maiden cobalt, nickel, and third resource at West Bear based on the positive winter drilling results south of the existing resource? Is this being planned? So as you saw from the presentation, we've expanded the resource to almost a little over 3 times the strike length. And so yes, there's no doubt that that there's more cobalt nickel defined there than there was at the end of 2018. You did see some of the dot colors of the dots there. It probably won't be as high grade, and we're currently going through the process of reinterpreting deposit. We just got the latest results announced here this morning, so I don't really know. I can't give you a number, but we do know that it's definitely expanding. Next question, Ali Black, why is social media not being used to promote UX as much as some other UX companies? I would agree with you that we're not using social media to the best. We still don't have a whole lot of followers, and so we are working on it more. We're trying also to do other things like our CEO Corner and webinars like this to help drive some of that process, so having more content will help. But yeah, I would agree we need to do that better. Next question, Garrett Smith. Has UX engaged any Indigenous communities in the basin regarding their exploration activities? So being at the exploration stage at this point, there's not a whole lot of incredible opportunities to bring on people who to help with services like camp, big camp catering and service contracts. But with that being said, though, we do engage and hire people from the local communities to help us with our exploration programs and also to be environmental monitors. And so we're actually right now we have a handful of people from 4, 5, 6 people working with us, and we work directly through the band, so that seems to really help. We also try to use groups that actually service companies like Drillers who do reach out to those communities. But as we move up the scale from more exploration activities to more development activities, that will certainly be important. It's woven into the fabric of what happens in the Athabasca Basin. Ali Black, who was the analyst who visited West Bear? Are there any confidentiality agreements signed? So I'll start with the last one first. By their due nature, confidentiality agreements are confidential. So even if we have them or don't have them, I would not be able to tell you one way or the other. So I'm sorry about that. In terms of who analysts who visited West Bear, we have one analyst that covers UEX. It's Abe Capital's David Talbot. He was up at West Bear. Anonymous question. The rationale between continuing to hold COEX within UEX has most investors confused. What's the downside of letting the market decide COEX's value? Spinning while the market is stressed lends itself well to future growth as opposed to fully exhausting the property. And I can't agree with that. We can't agree more with that last statement. The challenge, like we said before, was the ability of COEX to actually continue to fund itself, and also letting if we're trying to benefit existing shareholders, we have to benefit the upside growth with how much of it do we give away to new shareholders coming in to fund the new company. But in the current environment, we wouldn't be able to. In the environment before the current drill program finished, we don't believe the market was there where we could make COEX sustainable, at least in the short to medium term with financing, and yet not give away way too much that it hurt existing shareholders. So we're continuing to monitor that as it goes forward. And at the end of this program, as we said, we would look at the market again and see what we can do. Now, Ali Black, what is the timeline for financing? When are you raising? What's in the bank? So we have over $5 million in the bank, as you saw before, and quite frankly, we don't need to raise money anytime in the near future. We can get through to year-end without any troubles, for sure, and into next year. I honestly can't answer when will be the timeline for financing and when we're raising, because that's a difficult question, not only from an opportunistic point of view, but also from a disclosure point of view. Question from Jason Leopard. How big has the West Bear discovery grown from the winter program? Your best estimate. So I can't give you an estimate, one, from a disclosure reason, but two, because we just got the last results in from the last sampling program. We do know that we've grown and tripled the strength and grown a little bit in the down dip direction. So it is bigger, and we're working on that. How much bigger right now? And I'm sorry, I can't give you that number. The information is there, though. If you wanted to put it together, you could make a pretty reasonable estimate. I don't see any more questions. Anyone want to ask any more questions? Okay, so I'd like to thank you for, we've had you here for about 55 minutes or so, taking up your entire lunch hour for those of you in Toronto. Really appreciate your interest in the property and in our company. We really would like to see some feedback from you. If you do like this format, as you know, this will be going on the website, and this is something we're anticipating doing 4 or 5 times a year. But love to hear your feedback. So if you have any comments about whether this was valuable to you and whether we should do more of these, please send them through the question and answers here or through our website. With that in mind, I think we'll close it down. We've answered all the questions that were out there at this point in time. Please submit questions whenever you see, if you fit, we will do what we can to answer them. And I look forward to talking to you about our company again at the next one of these forums, should you decide we want to do these. Thank you very much. Have a great day.